So the next couple have been really exceptional at taking a tool that I provide to my clients and that we work on together to be able to manage, talk about the people who, and I think that they'll be the first to probably admit it, income limited or no cash flow, right? So the ability to be able to change the dynamic of how their money is working, I'll let them sort it out for you, but this is a debt elimination worksheet, affectionately referred to as a do. So it's like update your do or send me where are we at on your do, right? So they've taken this to a ridiculous level. So I'm just going to let them sort of pile in and kind of give perspective on where you were when you started and so on and so forth. So Kendra and Jerremy Foss.
Hi.
Hello.
I would like to say that this is actually a spreadsheet on steroids, but it's not. It's just a colorful chart because I'm a very visual learner. I have to see what's going on in order to believe that it's going on. And I have to be able to track it in a way that makes me feel comfortable with what is happening. So Julianne gave us the debt elimination worksheet, and she's like, so then it'll eventually do this, and then it'll come here, and then it'll happen this way. And I'm like, no, wait. There's got to be a way to actually show that that's what's going on. So I took her worksheet and kind of color-coded it. These are all of our policies. Lutheran, and these three we had before, and then these two we've created with Julianne. This is when we started with Julianne, which was July of 2010, so we're coming up on 5 years, which is crazy to me, and fantastic. Taking off of what Mike said about disciplined savings, when we were talking with Julianne to begin with about what it means to have a self-empowered bank and how to kind of redirect your money so that you're really pushing money into these policies and keeping track of all of these loans. We use a separate checking account. We have it titled our SEB. Where's that little thing? This one right here. And we're pushing money into that every month. That's just automatic deposit from our checking accounts, and we can never have out more on loan that we're trying to pay back than what we're putting into the SEB each month. So we're keeping track of, this is our disciplined savings right here. These are all of our loans out right now. And then these in gray are debt that we're paying off without using a policy. These are all of our loans that we've paid off, that since starting with Julianne, we've been able to eliminate debt. And then over here, these other gray ones, these were our mortgages. We sold our condo, so that one, that big, huge gray is gone. But I really enjoy being able to say to people, we're not in debt to anyone except to my student loans and Jerremy's student loans. And Jerremy's student loans are going to be paid off by July. And then all the debt that we have is, I own it, and I'm paying myself back on interest. And 5 years ago when we started, I don't know how many, it was easily all of these. This was all credit card debt. And we just couldn't I was doing fancy transfers and opening up another card, 0% interest through here. And I was doing it all right to stay above water, but I was like, we can't have kids until we get this under control. So when we found Julianne, I was like, we can have kids now. So now we have 2, and we're done. But it's fun for me, what I do and how I track this. If you go back the other way.
Yep.
I take the AMSCED schedule, the amortization schedule, and turn it into this, and then just track it every month. I like to go in here. Sometimes I leave it alone for a month or two, but I go in here and I highlight it. It's paid. It's paid. That's how much we put in. It's done. It's done. And for me, like, she'll give you the checked mark amortization schedules. That's great, but I like to see it all in one place. So this is my see it all in one place. These are obviously all of our premiums, when we had to pay, when we're paying the annual interest on the loans, when we took a loan out. These are all loans. Sometimes I'll have notes, but usually it lines up exactly with where a loan started on the other side. It's just my way of keeping track of it all. We've had more debt to eliminate than one would hope, and every year I tell Julianne, we're not going to take out any loans this year. And then every year, I'm like, okay, well, we're going to go to Cancun, and we're going to buy tires and whatever. And usually these, some of these loans are bigger. I was able to pay for, I wasn't given any maternity leave with our last child. I was able to pay my own salary for 3 months. So that was a big one. That was huge. But some of these are tiny. None of these are tiny, darn it. The ones that are paid off are tiny. Then as you scroll down, you can push down and see, like, some of them aren't starting until later. We are kind of pushing the can down the road, but we're not stealing our piece. We're going to be paying ourselves back because these rows have to line up with what is coming out of my SEB until we can afford to put more into the SEB. Does that make sense? Like, for what our amortization schedules will add up to here, it can't exceed this amount because this is what we can afford for payback on our loans. Every row is a month, and then bigger rows for the years. That's just like our due anniversary date. Woo! The one thing that Julian asked us to point out was how much interest we've been able to recoup or keep to ourselves, basically, over the course of the last 5 years. Jeremy did up the math last night, and we're coming up on $10,000 over the last 5 years.
Wow. Congratulations.
The amount of interest that instead of paying it out to someone else, that we've paid back to ourselves. So interest recouped is coming up on 10 grand just in a few very short years.
Kendra, that's not amortized, though, is it?
No, it's for the ones that were paid off. Those were amortized. So just
This
basically,
is to date, not past.
Those are to date on the bottom. Yeah.
That's a whole lot better than paying it to somebody else, isn't it?
Yeah,
You could do a lot with that.
yeah, $10,000 back to my bank instead of to somebody else's bank. It's
I think
pretty great.
the big one for me, which surprised me, was when I calculated the 3 credit cards, and it came out to $6,300 in 4 years, which just blew my mind.
Right?
So even though we're still having to take out loans and still finding things that are, oh, we should finance that instead of just kind of going to as close to zero in the checking account as possible, I still feel like we're in such a better place with being able to, we're just much healthier financially than we were when we started. Because we probably would have had the cash easily to just pay that. And they weren't actually, the dentist office wasn't going to charge me interest. They would have let me repay it back without interest. But it was actually to our benefit if we had the cash to borrow within a policy to grab it, charge myself interest, and then put it back.
I think that's probably one of the things that's the biggest power to this is just, all the simple daily life things that you would typically potentially put on a credit card. You can use this tool. It can be used for anything.
There was a period of 9 months where I didn't even really look at the due because we'd had a bunch of loans out. We didn't need any more loans. I was just not paying attention. And then all of a sudden a friend needed some help, and so I decided to see if we had any sort of cash value because we had pretty much drained our cash value in our policies. So it was like, hopefully you're not going to come upon a life emergency here real soon. And when I went back and looked at the cash value in our policies, it had obviously continued to grow. And, it would almost grown exponentially to what I thought it would. You think that it's just going to do this little baby step. But we had more than enough money to both help our friend and pay our son's tuition up front for the year, and just kind of, like things that I didn't think would be possible,
And that was
so.
no small loan.
No,
It's a sizable amount of money.
yeah,
It
there
was a $5,000 loan.
no, I think it came out to 8.
Yeah, I thought it was closer to 10.
Yeah, between right at the same time, we took out $8,500 for Jacob's tuition and a $8,000 help my friend out loan. It is really easy when you have the cash to just pay it. And I'll admit I've done that with like a few medical bills or things like that, but it's to your benefit to go through the extra step to grab the loan, because as you charge yourself interest and pay yourself back, it's just going to keep upping everything.
So do you wanna-
I think for the most part, I've decided, but there have been a couple times that, well, Jeremy and I have decided. He really is he's the one that convinced me we should do this. But there have been a couple times that I have not done anything until talking with Julianne. Like, which route's going to be the best way? And she's changed my mind on a couple things, so.
Well, and where should we pull it from? I mean, that one
Right.
comes up a lot when I work with them, because they have so many policies that they currently have in play. It's like, well, which one makes the most sense? And theirs are very strong, there are policies that they had prior to working with me, very strong policies, also more seasoned.
Yeah.
Meaning more aged, more mature. You saw kind of on my policy what was happening with it. So, often that'll be kind of our play if there's plenty of money in that spot, or where should I got this windfall, where should it go? Okay, so well, maybe we should, so, and just because you pull it out of one doesn't mean it doesn't go back into the other. Remember, there's one pool of money, right? Remember Nelson, that's, so all of your SEB account, your policies, even your lifestyle account, meaning your personal checking account that you're doing the rest of your life in, that's actually also part of it. So we can't discount, because all your money is there, right? So if you were going to pull money out of a retirement account when they got the money out of the 403B plan, so that helped them out. But if they spent that money in some way, they got to replace those dollars, because those are part of the pool of money, right?
I think, Tony, part of the decision making too on where to take the money from the SEB and put it back into a policy, I think that's also determined on the dividends that you may get for that year. And so there's some strategy there too, based on what the age of the policy is versus which one you pay back first. And she
Some
obviously
of
helps
these
with that.
loans, some of these policies have a lot out on loan, and even though it's my policy, I feel like I just gotta pay this back. So sometimes I just want to push it into whatever one is the lowest in cash value. Or the
And by
biggest loan.
using Excel and the way you have that laid out there, then is it easier for you to track, here's the growing balance of our cash values, here's the growing balance of our death benefit, the way you have it laid out?
That's my next,
Okay.
my hoped for next step. This really has just started as a visual tool for me, but as I've become, more aware of what's going on, basically, with all of it, there's,
That's where I'm going to supersize it.
yeah, he's gonna supersize it. So yes, you could do that, absolutely. And all of our premiums are on a monthly schedule, but yeah, you could use these. This is just indicating that the premiums were successfully paid, and that we didn't forget about it, all that good stuff. But this policy area could definitely calculate into something along those lines. I was actually shocked at how much money was in there, because it was coming from Northwestern, and I had started as a part-time employee and then had only been full-time for a few years and then left. And then it was after I left that I was like, maybe I should go back and get that money. And so I think it was like close to 15 grand that was in the policy, or in the 403B. And then I think what we ended up getting was 10, maybe 9, 10.
The strategy.
Go ahead.
Just a strategy on, how you want to handle the tax piece.
Yeah.
And we've talked about that before. Whether you want to, first of all, you already committed to it, and you'll hear Nelson say it too. You already you already made the commitment to pay the taxes, so we're not having that conversation, right?
Just when-
It's only the
Just
penalty.
when, yeah.
But most people think about, ooh, 10% of my money. It's like, yeah, well, let's calculate that based on 15 grand. How much is that? How long do you think, with the velocity of money and paying yourself back with interest, how long do you think it's going to take you to make $1,500? The time value of money on that between now and when they're 59 and a half, they're going to trump that number big time, right? So don't get hung up on that piece. That's the wrong place to get hung up. But you know, kind of handling the tax piece depends on what time of year, whether it's going to throw you into another bracket. That's where I come in.
Yeah, we didn't do it like that instant. Once we decided, it was under a lot of advisement. And she helped greatly with understanding what they were coming back with and saying, this is a bad idea. And
Right.
you just have to tell them, this is what we're doing.
What'll happen is they'll take the 10% right off the top, period, right? That gets handled. They should give you the option, although they'll tell you these days, they'll tell you that they have to take 20% to be safe for the tax part. That's generally how it's done online, but if you have them send you the paperwork, generally you can have them wait. I mean, I'll have people wait. Shoot, if you're doing it now, you've got an entire year before you're going to have to pay that tax bill. We'll build in the strategy to make sure that you have enough to account for that tax piece. You might as well control the money for that period of time, then give them their part.
And, you know, again, to strategy, we could have just taken that money and started another policy, but our cash value in all of our policies was pretty strapped. So we just paid back the loan, but kept our amortization schedules going. We didn't count that windfall of cash towards our loans. We just paid back the policy loan. So I'm still paying myself back on those original loans, but they've been paid back to the policies. So that was the strategy that we took, which was the right one for
Super,
us, but
yeah.
could be different for other people that don't have as much loan coming out of their policies.
That is leverage. Anyone else? You have a question?
Yeah, I was just jumping with my dad, you know, he obviously knows I'm into this stuff, and paying the tax, he's at the point where he can take out some, you know, where it's not the penalty, and just paying it, it causes him physical pain to think he's gonna have to, you know, send the IRS that money, and I can sit there and do a numerical example and show him, if tax rates stayed the same, you know, apples to apples, it's the same money, you're paying the taxes, you know, it's not like you're avoiding, doesn't matter, but anyway, you know, I get that, you know, in general, it's good to not wanna write a check to the IRS. And yeah, what we did in terms of breaking it up, because he wanted to knock out the mortgage on his place, and so we just ran the numbers, and if you took it all out 1 year, you would've gotten pushed up in one wage tax bracket. So we split up over 2 years. Technically, we could have done it longer, but on the margin, it didn't make that much of a difference. So, I mean, like Julianne was saying, there are things you would worry about, perhaps that in terms of the timing of it, but clearly just the general idea of, well, no, if I take money out, I gotta pay tax on it. That by itself is a crazy objection, because you know, it's just when you pay it.
Some people's issue is that, you know, Julian's just interested in selling life insurance. No, not really. That's actually just the first piece. The bank, what you just saw, that's what we're doing. The life insurance policies just, remember what we talked about earlier, that's the place for it to park, it's the vault. It's like until you need the money, that's what that is, right?